I'm 6 years in. I've done almost everything in the book, made almost every mistake. 2 of these past 6 have been profitable, but looking back, I wanted to unveil what I believe were the biggest mistakes that I have made, that many beginners would be much better off just not making or making less of them. The first 2 are super important, but the third is probably the lowest hanging fruit that you can go after, because it doesn't really require you to change the way you think and do things that might be difficult. Like, it maybe adds a little step to what you're doing already, but that tiny step over the course of tons and tons of trades, months and years down the road, is going to be absolutely massive for you. And if you can set that foundation now, you will be so much better off. I'm telling you, I wish I was doing what I'm doing now back when I started. I'd be in such a better place, and I'd probably be there a lot faster. The first mistake is treating trading like investing. I used to do all of this in one account where I had put in long-term positions that I was sitting on. I also had some kind of swing trade positions. Then I was selling covered calls on some of my long-term positions and even my swing trade positions. And then I was day trading as well. All day trading options, believe it or not. And then I think I even had some penny stocks in there. I had everything possibly going on in one portfolio, in one Webull trading account. And it was the most confusing thing, but mentally the most draining thing. I can't tell you how many Friday afternoons when I was living in Austin, Texas, dude, I sat down, or I got up from the desk, I went out to my balcony, and I sat down and I was just like, I didn't want to do anything. And it drained me for weeks and months, because I ultimately was losing a lot of money because I couldn't keep track of what I was doing. I recommend separate accounts for trading, separate accounts for investing, but just fundamentally, they're different. The approach that you have with investing could be super simple. Maybe it's not, but it could be super simple. And the approach that you have for trading might be a bit more complicated and is going to be more high frequency. I'll just tell you in my example, in my experience, my long-term investing strategy now takes 5 minutes a month. 5 minutes a month. I can set up automatic deposits. I can set up automatic recurring buys. And all I have to do is go in and maybe sell a covered call once a month. That's what I do. It doesn't take much time. Where all my time and energy is really spent is analyzing the markets, doing my own charting, doing my own analysis, and following things, setting alerts, setting my stops, setting my take profits when I enter trades on my trades. The long-term investing stuff I do in a separate account now, and it takes me 5 minutes a month. It took me 6 years to get to that point, maybe 5 years to get to that point. But it takes so much less time than the actual trading. And so I can focus that 5 minutes a month at the end of a month, or at the beginning of a month, or in the middle of a month, whenever I want to set that time aside to focus on my investment portfolio. And then I can focus the rest of my time, the rest of my mind, my energy on the trading the rest of the month. And I don't have to have this conflicting back and forth, oh, this position's doing this position's doing that. No, I'm over here. I'm not over here and over here. I'm just over here. And when I need to be over here for a few minutes, I'm over here. Simple as that. Now, if you're looking for a separate account to do your trading, Iron Beam's got you covered.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300 plus indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
Number 2 is confirmation bias. We naturally, as humans, are seeking this out subconsciously. We might not realize it on the surface, but we are subconsciously always seeking someone who is thinking the same way. If you are bearish and you want the markets to go down, or you're bullish and you want the markets to go up, there's a good chance you're going to find more of that information, or you're going to tune into more of those outlets, the media outlets that give you that information. And social media, the way the algorithms work these days, that's not helping us, because all we're going to get in our feeds is literally confirmation bias. Like, we are going to continue to get more of what we want to see because that's what we're paying attention to. We're not paying attention to the things that conflict or that are contrarian, things that we don't want to happen, but there are certainly arguments for those things to happen. And having an eye on both and having more of a well-rounded, a bigger picture perspective that takes into consideration both sides or multiple sides, multiple angles, is very, very beneficial. However, we got to be careful because when we start taking into consideration a lot of different opinions, that's where we go wrong. What I wish I did more of back years ago was take into consideration different data, different opinions, different things, but then make my own decisions. Iron down the things that I want to look at, the things that I like, the things that I'm finding the best edge or that help me the most. Only look at those things and then make my decisions based off my analysis of those things. This way I can keep things consistent, and over time, I'm not changing where I'm getting this news, where I'm getting this information, where I'm getting this chart analysis. I'm keeping it the same, and then I'm learning how my brain, how my mind reacts, analyzes, and then utilizes that information, and if it's helping me or hurting me, and then I can make the determination if I need to get rid of it or if I need more of it. Number 3, this one's huge, not tracking your data. This one is like the lowest hanging fruit because you can simply go out there and start a spreadsheet and track all of your trades, track your win rate, track your average risk reward, track what you're trading, all that stuff. Add notes and then refer back to that note sheet. Nowadays, there's platforms like TradeZella. I'll leave a link below with a discount code as well if you're interested, where they can do it all for you. But whether you use them or yourself or some other platform, because there's other ones out there, whatever you do, this is easy money. You're able to see what is working, what is not working. You can actually track how good a strategy performs over time and then make adjustments if you need to. I used to be the person that would strategy hop, and the reason why I would strategy hop is because I just didn't trust my data. I felt like, oh, that wasn't working today, I'll go here. Oh, I'll go here. Inevitably, the market's going to cycle. There are going to be periods where a certain strategy works very well and then it doesn't work very well. Does that mean that that strategy doesn't work or that you can't utilize it? No, you can if you learn when to deploy it, when to not deploy it, or when to push, when to pull back. And that is all information that you can get and that you can pull from tracking your trading data. The larger the sample size, the better. This way, when you have data, you can make data-driven decisions based off of what is working, what's not working, what could improve your strategy, what actually could really hurt your strategy. You take away what could hurt, you add what can help, and you rinse and repeat until profitable or until you're happy with where it is. And obviously things are going to change going forward. The way you do things might change, the markets will change, and so you'll make those adjustments over time, but now you have a process in place to make those adjustments, and you can be confident in the adjustments that you do make. Now, if you want to know what I stopped doing right around the time that I did turn profitable, I'll leave that video up on the screen right now. Thanks so much for watching. I'll leave the sponsor and the resources down below. See you guys in the next one. Peace.